FXBros.
I missed the intro. We connected. We live. Yeah, we live. All right. I know we've been off schedule a lot this week, but it's a lot of things transpiring. I know I'm about to get ready to actually move out my apartment and about to prep for a transition. Not soon, but I'm making a lot of preparations for it. It's actually going to be son of a bitch. The market is selling the fuck off. Actually going to be sometime in the summertime, which is like right on the corner. Yeah, this is fucked. Didn't even get back in my buys, man. So yeah, that completely got stopped out. So we didn't touch the trend line, but the market is back in this range that we've been in for the past. This is Thursday, Tuesday, Monday, Friday. We got Thursday, Tuesday, Monday. So yeah, the past last week's range, and then the week before that, that was the high part of that range going into the end of that week. Yeah, the market has been doing some weird shit, as you can see, even on a daily, starting from January 1st. Let me put a vertical line so you can see what the first is. This shit here. January 1st. Let's change that line to a real line. Let's do 3. That'll be good. So, even on the daily, we only had one bullish engulfing that was short lived. We had a scenario of some bullishness, but that was the actual bullish move. I mean, even if you want to look at it from a point of if you didn't catch this price, which is the close of this bullish one, this candle gave you a better price to push higher. You know, like I said, looking in hindsight, we had another bullish engulfing, but that was short lived after it bounced off a trend line. So that was actually a good reason to get into sales. And these two bearish engulfings that we really had that we thought was going to be the trajectory for the rest of the week coming forward, that got swept, and now we back in that range. So where those trades are becoming profitable again. Some weird shit. Okay. Looks like the only thing we did see for the weekly is a bearish engulfing coming off that bounce off that trend line. And depending on how this week closes, which is looking like it's going to be a bearish week, we might get another bearish engulfing on a weekly. what we can trade into. So we might be looking at sales depending on how we need to start taking out bearish structure like this move here. There was some minor structure here, but we was looking for really like that 61.70 to be touched. Yeah, to at least be touched. I mean, it came close-ish at 89, but we needed that area to be touched. And that never happened. So we just been ranging for the most part on a daily. And the 4 hour has just been given short-lived signal after short-lived. Even if we're looking at these bearish engulfers right here, it gave you 20, even with the wicks 30. Then over here, before you started getting bullishness, we had 20. So the 4 hours only giving you 20. You know, we're trying to stick with this higher time frame notion. I mean, it's not easy. I'm pretty sure the 1 hour has been fairly simple as far as trying to catch a smaller trade, whether it's not for 10 to 20 pips max. I know that's been the move on the 1 hour, but just been trying to expand our minds and our trade size. So with that, it's expanding the time frame and the range that we study. There was news that recently came out. I think there was existing home sales coming out. So we got continuous jobless claims, which the consensus was 229 with 227. So that's positive. We got less people taking jobless claims. The continuous jobless claims is going up though. Yeah, we do have news coming out at 9 o'clock. Home sales, existing home sales. This will be the last little piece of news we're gonna have for this week for US AU. Yeah. All right. Wow. Let's take a quick glance at the dollar. So even from there, let's look at this. Dollar started showing signs of, structure being built right around, let's see, March 10th, at Friday, March 7th to March 10th. And we're coming from sales, straight sales from February, let's say March 2nd. So March 2nd to March 7th to the 10th. Let's look at AU. There's a dollar falling, we should be shooting up. So we'll look at March 2nd. AU, March 2nd. So we did get the bullish push, but we didn't take out anything. Let's see, you see on the dollar, we took out structure here. Took out structure here, took out structure here. AU, on March, I'm not really seeing that. You know what I'm saying? As far as real structure, I mean, we had this built up on the 2nd, on the 3rd, but that wasn't really structured, but I'll give you that. And then we get to the 7th and the 10th is where they started building. Market shot up higher, so the dollar should have dug deeper on the 17th. Did we get that? No. Gotta keep an eye on that dollar, man. Let's see what the S&P looking like. Bad day. Everybody's selling off. Red stocks. Certain stocks are having a decent day. Tesla is up 4%. Uber up 2%. Lyft up 1.5%. So it's not that bad. Bitcoin starting to regain a little strength. Where's gold at? Gold is at 3K. Come on. Is that a first? Yeah, that's a first. Oh, it just hit 3K. Nice. And that was last week. That was last week. Open that ass. Dang. Definitely got to figure out a way to trade gold, or at least buy it. Got some gold jewelry. That's about it. For gold futures. We need gold futures. Oh boy. Yeah, but overall, just looking at the pair we primarily trade, which is AU and others. Before I make a statement, let me look at the Jabby. Jabby on a 4 hour. Let's look at the daily. Jabby on a daily since January. It's not been great. Certain setups. Look like everything. Look like shit's starting to line up now. Like that. Like we overall, what I'm getting from is like the first quarter was just a big reset, a big slap in your face if you was first starting out trading. Probably when your first experience in trading was not happy if you just started in 2025. But that's what we call a correction. We have these. I think people was more expecting the market to go on another tear, especially after we got Trump in the office. But it, for what I guess long term, what they plan on doing, we had to have some kind of correction. It was better to have it sooner than later. So if you really want to look at it, I'm trying to be optimistic and positive about the situation, but it's not great. Expecting when you have an expectation, but you really don't know how to go at that expectation at the end of the day. Because you using your mental knowledge and the tools that you have to give you the best analysis to invest your money, but when you got weird shit going on, it is makes it difficult to do so. But yeah, nonetheless, I think we just need to take it kind of like that grain of salt approach and realize that we didn't have anything crazy. It's not like we left. So if we look, I said, we look at January. January started at the beginning of the year. That's our price right there, which is 61.90. Let's see, 61.90. In that same run, that same week, or let's even say the first month. Let's go to the first month. The first month we had a high of 63. Let's see, 20. Yeah, 63.20. Currently, we're at 62.89. We're still in January prices. So if we would have been here, break out a structure here, then market traded back in, hesitated here, found support, and then advance, and you didn't catch buys down here, then you could feel like you was left out. But right now, the market is having a field day. It's taking profits back from traders that's eager to get into the market, which is including me. Yeah, taking money back, and it's a big reset right now. So luckily, this doesn't transpire into something crazier. You know, a prolonged sell-off in the markets. We don't need that. We don't need no uncertainty or no shit like that. So hopefully everything clears up for second quarter, which is right around the corner. But yeah, we need to tighten up. I know one thing I was gonna position myself to do is only take 10 and be done. I know that's kind of going against the larger time frame, but I just need to get back into more of a winning structure and not look for the longer trend. Because I mean, looking in hindsight, it's not giving me. I rather get it and leave money on the table than trying to get a lot just because I'm on a high time frame and I'm barely getting 20 pips on the 4 hour. Like that's not the move. Definitely not the move. So yeah, just gonna learn from what the market gave us. He was trading gold. He's sitting pretty nice. Look at January here. Nice, but two bullets in golf is on January. You just still riding the wave. So gold traders caught the move. So we are learning. I will tell you this: in the next transition of the financial transfer of wealth, when markets turn into bubble and we get bullish scenarios, um, we see how stocks lose wealth, or in the transition of stocks from losing wealth, being that they were too bullish and overpriced, we'll start to see gold start to go on a run. And that's basically the transfer of people taking money out of their portfolios and putting into something more harder and more, something that won't break. You feel me? They got a good foundation. It ain't gonna fall. And that's gold, bonds, stuff like that. So it's not just the fact that the company's doing bad, but people are pulling money out of the stock market. And looking at this chart, you can see exactly what they're putting it. But yeah, we about to lock in. We'll be back on Sunday. Tap in and touch bases and get ready for the second quarter. And kind of wrap up the first quarter. Learn, like I said, learn from what it gave us and realize what we're probably going into. More cleaner entries and surefire directions versus just sideways shit we've been dealing with for the first quarter. That being said, we'll be back Sunday to go over the week and get ready for next week. Probably about like 9 o'clock, 8 o'clock, 8:30 on Sunday. All right, peace out.